I'm going to show you how to completely transform your trading to stop losing and start winning before the year is up. So if you tuned in last week, I did a series called Why You're Not Winning, which broke down the 3 big reasons why you lose. They are technical strategy, risk principles, and the implementation path. Now, if you didn't watch the series, that's fine. We're going to break it down in a concise manner today. If you did, this is a solid recap and essentially the roadmap that will lead you through following each of these steps that I gave you. So let's dive straight into them. What I want to do in this class is take you from this chaotic mess, this frustrating, stressful mess of a journey that you're on, and give you a linear path to success via a roadmap. So what I need you to do is listen to each step I give you and follow it step by step. We're first going to talk briefly through the problems, starting with technical strategy. Now, traders fail with their technical strategy for 3 core reasons. They strategy hop, they trade concepts without context, and they trade in a discretionary manner, which is confusing, frustrating, and a little bit chaotic. So when you trade without a system, you endlessly tweak the way you trade, and you trade concepts without understanding the why behind the market, you are left in a cycle of endless confusion and frustration, as I'm sure you probably know. When you jump ship on systems all of the time, your progress path, while it might start looking good, ends up resetting to 0 consistently. Because every time you jump ship on a system and start looking for a new approach on YouTube, you kill all of your progress and reset to 0, which is why you can be trading for months or years and really still not get anywhere. The goal with this roadmap is to take you through one repeatable system, help you build that out, and push you towards exponential growth. Okay? So from your technical system, we'll go through all of those problems and break them down. The next big problem, maybe one of the biggest, is risk principles. It's the risk and the math that crushes traders when disrespected. In order to respect that math, you need positive expectancy, optimized risk versus reward, and well-managed risk exposure. Again, all things we're going to talk through soon. Because technicals mean nothing if you're getting destroyed by the math. Win rates, average win and average losing size determines your long-term expectancy. These are the things that really make the money behind the scenes. And it's why you can do well for a while, but then completely blow everything up with one single trade or just one day where you mess things up. Because if you don't have the risk dialed and the math dialed in, you are pretty much one bad mistake away from losing everything. And the final reason traders lose is the implementation path. Traders are naive to how they should operate and it keeps them stuck. You need a clear roadmap to follow. This is that. You need repeatability in your systems. We're going to build that. And then you need to focus on the system without deviating from the process. You can learn a million things and it still won't make you better if you don't have a way to optimally apply your findings in the markets. Implementation is more important than information. All right. So how do we fix all of this? Well, we do that through the trading success roadmap that I am about to give you. We're going to go through this step by step. So listen up, take notes, and follow this journey. This is what I need you to do. The first thing you need to do is to decide how you want to trade. Do you want to day trade or swing trade? Are you going to trade price action or indicators? Will you trade currencies, commodities, crypto, indices, whatever it may be? You need to get clear with what you want, because then you can build everything towards that goal. It doesn't really matter how or what you want to trade. That's individual to you. It just matters that you know exactly what that is, because then you can tailor everything towards that goal and also eliminate everything else, because everything outside of your goal becomes noise. Now, some advice, obviously I said you can trade pretty much any concepts you want and find success, will be to trade what I call logic-based concepts. See, in trading, we have something called the logic gap, or that I call the logic gap. Everyone starts with a basket of concepts. Could be trend lines, support and resistance, supply and demand, whatever it may be. We all want to get to successful execution, but most people fail. And I think the reason that most people fail is because they throw these concepts onto the charts and they execute trades risking real money based off of lines and boxes and things they've drawn on the chart without understanding what is actually going on. In order to fill this logic gap and bridge that gap between where we are and where we want to be, it's a lot more valuable to trade with concepts that make sense of the market, because when you understand why the market is doing what it's doing, you have better odds of reacting to that properly, okay? And also trading it with confidence. So when you trade with these logic-based concepts, you turn your trading into a cause-effect-outcome scenario, basically a path where you fully understand each step of what the market's doing. The cause, by reading the market with these concepts, you understand what the market's telling you and why the market is doing what it's doing. Effect, what scenarios does this create and how can you react to it? And outcome, How do you turn this into a win? So it's kind of a way of reading the market like a book, reading the story the market's telling us rather than just throwing some lines and boxes on and praying that it works out. If you want to take up these logic-based concepts, I would study in depth Japanese candlesticks, market structure, supply and demand, liquidity, efficiency, and momentum, because these concepts show you why the market is doing what it does. They track real price action and give you an insight into the psychology behind the market. All right? So whether you take me up on that or not, you should build your trading into a rules-based system. So when you're clear with what you want to trade and you're happy with the concepts you've got locked in, you want to simplify those concepts into a rules-based flow. Now, instead of trading randomly every day, where every trade looks different and everything's a bit of a mess, you should create a systematic flow that prints A+ setups by creating if this, then that scenarios, eliminating guesswork, and making trading a simple and repeatable process. This is what a rules-based system looks like. You can make any bunch of concepts into a rules-based system. Essentially, what you want to do is turn it into a step-by-step flow. So this is what my trading looks like. In the morning, I come to the markets and I analyze for my standard setups. If one of my setups is not present, I don't trade. If it is, I move on to the next step. If my entry criteria is not met, I don't trade. But if it is, I move on to the next step. If my additional considerations like economic news timing are all good as well, then I will finally take a trade. And this filters my trades through. So number one, it's super simple because it's an if this, then that, if this, then that, if this, then that format. And number two, it filters out anything that isn't the best possible trade, which gives me the highest odds of success, giving me high reward trades and high probability as well. Now, another benefit of this if this, then that style of trading is how it formats our trading into multiple scenarios. So taking a look at this price action, we have a selling zone, an imbalance beneath. Our idea here would potentially be we want to sell this market because it's moving down. But where exactly do we sell it from? Well, with the if this then that format of trading, with this rules-based approach, the market tells us when we take our trade. For example, if we get confirmation, then I will sell. There's the first if this then that. However, if the market fails at this supply, then I can buy to the next selling zone. So we create scenarios both ways, and instead of having to ever really predict the market, we just react to what it tells us to do. We don't know at this point if it's going to go up or down, but we don't need to either. The market will tell us, and then we can execute. So by building your strategy into a rules-based if this then that style, using logic-based concepts, you eliminate chaos, simplify trading, get rid of guesswork, and optimize your odds of success. Success on the charts is all about edge, which is created by logic-based concepts, and repeatability, which is created by the rules-based system. And with everything I've just showed you, if you follow those steps, you will have this built in. The final thing here on technical strategy, and this kind of goes for everything we're going to discuss today, is simply do not deviate. Remember, we looked at this progress path. Most traders go wrong because they switch their systems, kill all their progress, and reset back to zero. You need to avoid doing this, which means avoiding deviating from your system. If you want to do well, you need to stay focused with your one repeatable approach that you build out following this map. And eventually, this will smooth out into exponential progress because you'll have a deep understanding of how your system works. You'll be able to build on strengths, cut back weaknesses, and push yourself further and further towards your ultimate end goal. So, this is the roadmap to follow from a technical perspective. Get clear with how you want to trade, build a rules-based system around this, focus on cause-effect context and if this then that systems, and I really do say consider using logic-based concepts in your trading because being able to read the market like a story feels very good, increases your confidence, and gives you higher probabilities of success. Here's a trade I took recently. This one shows pretty much exactly the same format I follow on every single one of my trades. And I'm just putting this in there to show you the beauty of this style of trading, okay? So, let's move on to step 2, risk principles. In reality, money in the markets is truly made or lost in the math behind your trading. You don't win or lose on the charts. You win or lose individual trades there, but you win or lose long term based on how much you risk, how much you win, and how often you win and lose. So what we want to do when it comes to the math behind trading is create positive expectancy. For anyone who doesn't know what this is, Positive expectancy is a process that, if repeated endlessly, will create a profitable outcome. Negative expectancy is a process that, if repeated endlessly, creates a losing outcome. Now, most people are stuck here, trading randomness that pretty much has no odds of long-term success, even if in the short term you win or lose trades day to day. If you keep doing the same thing long-term, you are doomed to lose. We want to shift to positive expected value. How do we do this? Well, the success equation to create positive expected value is basically positive asymmetric risk to reward plus reasonable win rates. This might be very confusing, but don't worry, I'm going to break down what each of these are now. So risk to reward is how much you risk on a trade versus how much you stand to gain. So this is a risk reward ratio, 1:3. This ratio, basically you're risking $1 to make $3 back, or risking 1% to make 3% back, okay? Positive asymmetric risk reward is exactly this, risking a little to make a lot. If we can build this into our systems, we have very good odds of success. So, obviously, you might be inclined to, well, if we're going to try and make more than we lose on each trade we take, why don't we push for massive numbers? Well, if we start pushing for 10R, so risk $1 to make 10, you've got very low probability of success, because in order to achieve this risk reward, your target needs to be, multiples larger than your stop loss. So to make a 3-to-1 or a 1-to-3 risk reward trade, you need to have a, for example, 10 pip stop and a 30 pip target, okay? 3 times larger than your stop loss. That's pretty reasonable and can be done quite consistently. Even 4, 5, and 6R targets can. But when you're looking to risk 10 pips to make 100 pips, well, you're hoping the market's going to fill quite a large range there, and that's not always going to happen. So weighing your risk reward around the 3R mark as the sweet spot level is a very good way to get those outsized winners, but also maintain a very high probability of those trades actually succeeding. Now, with 1-to-3 risk reward, you can be wrong on 70% of trades pretty much and still make money, which is pretty wild. It removes uncertainty and worry from your trading and allows you to print positive performance even when you're wrong. Now, obviously, as we've just said, even when you're wrong, this comes down to win rates, all right? When it comes down to win rates, most traders are obsessed with being right and winning more often than they lose. But in reality, win rates and how often you win doesn't really matter and shouldn't be your focus. If you have good risk to reward baked in, you can lose half of the trades that you take. A lot of the time, you can lose a lot more. If you've got 1-to-3, you can lose 7 out of 10 trades and you're still going to make serious money. You basically turn trading into a coin flip situation that costs you $1 when it lands on tails and pays you $3 every time it lands on heads. Obviously, this is a very profitable situation to be in. All right. So basically, embrace losses. Don't worry about them. They're never going to stop coming. Stop worrying about win rates. And instead of focusing on being right, focus on making money, which means less attention on being right and feeding your ego and more attention on being profitable via positive risk to reward. Okay. So when it comes down to our risk principles, then we want to build a 1-to-3 risk reward system by basically targeting trades that are 3 times larger than our stop loss. We want to aim for win rates around 50%. Anything around that level is fine. And we want to risk 1% per trade on every trade to return 3% or more when we win. This creates that positive asymmetric mix between our trades. Our losses are small, our winners are big. And taking it back to some trades I've taken recently, these 2 trades here highlight the risk reward perfectly. This is my most recent trade. This is a 6.5 almost percent return trade with 1% risk. This is a 3.8% return at 1% risk. This is over 10% in 2 trades here. I could lose the next 9 trades and I would still be 1% in profit. This is a very good situation to be in and highlights the importance of weighing that math, the probabilities, and the edge in your favor using risk reward. All right. I don't need to win often. I just need to win big when I do. So that is risk principles covered as well. Now let's talk through implementation, your implementation path. Most traders go wrong at the implementation stage because they fill their minds with information, lessons, and concepts every single day. But when it comes to practicing, applying, and building experience, they mess everything up. They get lazy, they don't focus, or they just simply don't know how they should be operating, and it keeps them stuck for life. So here is the 4-step implementation path that I suggest you follow using the information that we've covered so far, with your system built out fully from that roadmap on technicals and risk. The first is strategy. You need to build out your strategy with logic-based concepts, I would suggest, and positive expectancy, so that you can understand what the market is telling you, you can react to the market with your rules-based approach, and you can factor that math in your favor and make sure that you are highly likely to win long-term due to the way that you are sizing your losses small and wins big. If you stick to this strategy without deviation, stop learning new stuff, you can learn from your own successes and failures, then you will do very well. Okay? And once this is dialed in, you move on to step 2, which is validation. So in validation, once your strategy is dialed, you test your strategy to ensure that it wins. You can first use a backtesting simulator like FX Replay or Forex Tester to collect years of data and experience fast with zero risk. And then when you are trading, say on a demo account, you can journal, track, refine, and retest everything that you've looked at to optimize your system before you risk any real capital. This validation stage allows you to build unwavering confidence in your edge and master the craft of trading without burning any time or money or damaging your mental health, quite frankly, by throwing away your life savings. You don't need to do that. You can practice everything with fake money and simulations before you even involve a dollar of risk, okay? Once the validation stage is done, you need to move on to the mastery stage. And here, we do need to trade live. We do need to trade with a small bit of real money because we need to get used to the mental elements of trading in real time, like patience and obviously just the real loss and gain of money in reality. But here, we should risk little to learn a lot. Trade small, keep it to a very manageable amount of money that you wouldn't mind losing, and focus on learning over earning. Don't try and flip accounts here. Don't try and make millions. Just focus on mastering the skill, building your iron mind inside real markets, and proving to yourself consistency outside of simulations. And when you've done this, well, that's when things get fun. When you've done this work up front, then you can start to scale. This is where you go for funding. This is where you start trading larger accounts. You increase your size only when your process is second nature and you feel very confident in your abilities. And you scale in phases. Don't go big fast. Go a little bit bigger than you are now, and then a little bit bigger after that. Protect longevity over quick gains because quick gains generally lead to very quick, very big losses, okay? And we do not want those. Consistency builds confidence and confidence builds scale. So if you consistently scale slowly through all of the things I've discussed so far, that is going to give you the best odds of success. So first, lock everything in. Second, practice and validate your edge. And third, slowly scale towards your goals. This is the implementation path you need to follow: strategy, validation, mastery, and scale. And now you know what you need to do. So go and get it done. I've given you the roadmap. I've given you everything you need. And if you want to go and apply this, that is perfect. Follow this process. You'll become a much better trader a lot quicker. But if you are interested, I've got something for you. This is not going to be for everyone, but some people will appreciate this. It is my new educational program, which is a 10-part implementation program to get you moving fast towards your goals and break the endless loop of halted progress that you've been stuck in. Imagine going through this validation process, this 4-step system, with me directly, okay? It's all about implementation. Now, these are some of the results that I've gotten students using the same systems I'm teaching inside of this program. This is literally a very small portion as well, so that just goes to show how effective this education is. And here's a few of the small but respectable wins that my students have locked in, not to mention some of the very big ones, which maybe we'll talk about a little bit later. If you give me a couple of minutes, I'll explain how this program works. It is made up of 3 core elements. This is how you will go through the journey if you decide to join me. First, the core curriculum, which is, instead of being a long drawn-out 200-episode video course teaching random stuff you won't use, it's a concise 10-part curriculum focused on getting you into implementation as fast as possible, without the noise, the complexity, and the confusion. You complete one class per day over 10 days, and in 2 weeks you have the system, the mindset, and the roadmap that you need all dialed in and ready to use in real markets. Now, you do get access to this program forever, okay? You'll have the videos, you can watch it in your own time. This bit is self-paced. Then you join us in the gated network. This is where things really go down. This is our community. And instead of being a chaotic chat room crammed with thousands of beginners asking the same questions and giving you no value, I've built a gated channel that you only join when you completed the program of committed doers who are all locked in and focused on the same mission and goals as you. You get direct access to me with your day-to-day questions, lessons and insights from other traders on the path, and you can share your wins, losses, and learnings, and benefit from those of others as well. There's also a content vault in here with all of the previous calls we've done, wisdom and psychology lessons, case studies, and trade recaps. It's basically an extra layer of learning after the core curriculum, but all of this is focused on just pushing you towards that implementation and helping you to master the process along the way. And that is why, of course, we also have some nice support. Now, when I was building the support for this, I thought, what do? Do we do calls all the time? But I realized it's not really the most effective spend of your time or mine. So instead of 5 calls a week that are simply scheduled in for the sake of it, like you see in a lot of programs, where nothing of value is even really shared, I've built bi-weekly Q&A videos where you get your deepest questions answered on a consistent schedule. This process means your time isn't eaten up, but when you have a question you need the answer to, you send it to me and I create a deep dive video with examples breaking down all the burning questions asked by traders in the network. Now, this is of course in addition to my activity in the network and the peer-to-peer support you can receive in there. So when you've got questions, they're answered fast, but if you've got big ones you want covering, they go in the Q&A videos. Now, time is your most valuable asset. There is no need to schedule endless calls just to stay in the loop. No need to watch 100 hours of recordings just to hunt for one gem. This is a simple, straightforward, time-efficient, and massively effective way to run the support, okay? So through this, you master the system, implement it with me, and get your questions answered. Hopefully helping you to get results like some of these students who have been through the program as well. Now, these are, again, just a very small few of the big results we've seen, and I can't guarantee you're going to get results just like those because realistically that all comes down to your willingness to put in the work. But I can promise you I will give you everything you need to make it happen and give you all the support that you need along the way. Here's just a few words that people have said about the program so far. These are the first people to go through it. Obviously, as you can see, they're enjoying it, and I believe this is my best program ever. If you want to join, the founding member price is running until Saturday, December the 6th. There is a link in the description to do that. This might be for you, and if it is, I'll do everything I can to help you succeed, as I have done for thousands of others. If it's not, that is totally fine as well. Just make sure you follow the roadmap I've laid out today. Hopefully this has been valuable, and I hope to see you inside DTM.